Traders, welcome back to our price action trading lesson. And for today's lesson, we're going to be using the ES and minis futures. The price action leaves us clues, and let's talk about the structure that today's session started with. We can see that we have the 21-bar exponential moving average, the supportive indicator only, is for the most part flat, and we can see a lot of price swinging up and down, up and down. So right off the bat, I can see that there is no clear, strong uptrend or downtrend being present. Just move down and move up, basically indicating a ranging market. And I can also see that after the market opened, it formed congestion. Once you see EMA exactly in the middle of these bars and multiple bars stacked right next to each other, this is price action telling you this is a congested area of indecision, and I cannot place trades while the prices are congested like this. Notice most breakouts will fail according to trading range rules, and this congestion is nothing more than just a smaller version of a trading range. The two-legged pullback played out because market likes to move in pairs of twos, and I can see that the flat EMA is still present, which means it's forming a smaller trading range at the upper part of the main one. And the most recent trend is bullish. And remember, there are micro trends even as a part of the big pattern, of the big structure. Even though it doesn't look like this, there are small trends. So I always want to identify the micro trends because there's a reason to price action. And as the prices are trending to the upside, I'm looking for a second entry long at the EMA because the most recent trend is bullish. And prices are failing to pull back to the EMA. We're closing outside and we already created a new extreme. So at this point, once I see break new high, I need to pause looking for long setups because we're bouncing at the top of the trading range where all the sellers may start selling, the buyers will take profits. And even if you draw a possible wider channel, after two-legged pullback, it reached new high. So there is really no reason for me regarding the price action to look to buy. Okay, the stronger selling momentum happened and prices are trending to the downside. So what I have to do now, remember, there are small trends even during a big patterns. So naturally, if I want to stay on the right side of the market and I don't want to get trapped, I want to follow the price action correctly. I'm going to identify a channel, going to connect the first couple swings, confirming here. And since the trend is down, I'm going to be counting for high probability setup to sell. I will not just sell randomly, selling low. I want prices to pull back to key entry point where the sellers will start selling because it is going to be the correction phase ending and the push phase beginning. So I'm counting from the lowest low. When I was counting for longs, I was counting from the highs. Since I'm counting for shorts, I'm counting from lows. So this is the lowest low of this move down. And I'm looking for breaks below the bars as they're working higher. And this is the first bar we broke below, indicating first entry short, but it's not high probability setup just yet. And notice we have a second entry short because it was the second bar we broke below its low. And notice EMA rejecting once and EMA rejecting twice. So this is a good sign the sellers are in the market. And according to trendline rules, we expect new extreme. However, notice the single bar. This is not showing me a strong bearish momentum. This is a bullish doji, quite neutral. I don't really want to sell below this bar even though the context is good, but shortly after a nice bearish bar form, and we can use here what is called a double bar entry if the context is really good, which in this case we can see two rejections at the EMA at the key entry point. I can wait for this bar to get a trigger below and then possibly drop my limit order a little further back. However, the stop loss still needs to go above the original single bar, above this doji bullish bar. So if the context is good and you like the setup, when the first signal bar is bad, you can use possible double bar entry, especially once I saw this bar forming. I really like thinking about double bar, but the momentum was so fast, I didn't get filled. But this is a first decent setup that you could have considered as a double bar entry. Maybe if your single bar was better, you can go short, but the downtrend is new extreme. And notice you're selling high where the pullback will end and the push phase will start. Okay, so we have new extreme. So I'm pausing my short setups. I'm at the bottom of the trading range. So at this point, I can see EMA rejecting every single time. Can I go long? Not really, because I'll be buying directly into the EMA. It's getting a little bit wedgy. Don't really want to go long, even though it worked for a scalp. Okay, we have a new extreme even for this correction. And prices are breaking to the downside. And notice how broad the correction was. We have a move down, broad sideways structure, and a massive spike down. The broader this is, the more sideways this is, the spike down is most likely a bearish depletion. Remember, we are still trading a trend range and we traded up into this trend range. So I have no reason for me to start thinking about selling. In fact, this is a failed breakout. Most breakouts of trend ranges will fail. So this right here is a failed breakout. Once again, I would have to use double bar entry, waiting for trigger above this bar, but it never triggered. There was never a trigger above this bullish bar. It stalled, formed inside bar, so I cannot really take it, and prices are trading to the upside. So great clue here when I'm watching this to trust this failed breakout is how sideways the momentum was. It's very broad. First leg down, correction, second leg down. This is a depletion. When I'm watching this, I was leaning more bullish. I was expecting failed second entry long, failed second entry short above the EMA. We pushed above EMA, but prices are selling off strongly. So this is quite concerning. I have to definitely pause looking for longs now because something is off. We didn't even stay above the trend range, let alone the EMA. I have a second entry short, first entry short, second entry short, but so far from EMA, so low I cannot sell. And prices keep heading lower. So, okay, I need to reanalyze the market again. Something is different. If I'm going to zoom back, I can see that we are very close to the bottom of the trend range. We are way past the midpoint. We moved too far down for this trend range to be considered valid. And notice, you never want to be selling the breakout. Most breakouts may fail at least temporarily. You want to wait for the breakout, pull back, and then you want to consider selling if you intend to sell. So now that I'm observing a brand new structure, what is the price action telling me? Multiple lower highs, multiple lower lows. We move so far down, and there's always a pattern present, so I need to find a correct channel. It's completely normal that the shortened channels may evolve into the stronger ones, which I'm getting the confirmation and that this is truly going to be a bigger channel. Why? Because the first two swings will step the trend line, third swing will confirm it. I'm just going to copy it, put it at the bottom, and this channel fits fairly well, especially off the highs, which means structure is bearish trend. I'm counting for shorts from the lows. We have a second entry short, but it's way too big, too far down, no trigger below, I can't take. By the time I get lower high, once again, so far from EMA, I want to sell at the key entry point, manage to work for a scalp. I'm not interested. So price action is correcting. Once again, new low, first entry short. I'm leaning more towards second entry short, possible at the key entry point. Let's see. Okay, we have most likely a second entry short at the key entry point. If this is going to trigger, can I go short? Well, you're still above EMA and the signal bar didn't close that great on its low. However, if this triggered and it closed right at the trend line at the key entry point, you can consider selling, but it never triggered, so we don't need to worry about this. The market is trading to the upside. We have new extreme, we have first leg up, break, second leg up. Market likes to move in pairs of two, so you can see once you have bearish trend, you always monitor the two-leg pullback. We have a second entry short, we don't have no tangible key entry point, no triple top, double top, no resistance, no trend line, just hanging there above EMA. So I definitely want to see a lower high confirmation setup or failed second entry long. Okay, can you get lower high? We cannot. The market just keeps pushing lower. By the time we get lower high, it's way too far down. Unfortunately, no way for us to go short, even though the context is clear and concise. We know exactly what to expect, but pretty much no safe way for me to sell. And prices are trading to the downside. And notice what is happening. After new low, push down, another push down. So the structure is quite bearish. However, after new low, a market can enter a brand new market cycle, a correction phase or reversal. We have a new low, first entry short, pullback, second entry short, failure above exponential moving average, and this right here is a reversal pattern because the downtrend is a break new low, failed two attempts in the previous trend direction, which was bearish, and we have a failed second entry short above the EMA. Can you go long? I'm not too excited about this long because you have some resistance, it's too sideways, and this is too bearish for me to look for early reversal. But I can market more aggressive. If you took this long, I can definitely see the reasoning because the signal bar is so small, you may risk it. but it's a little bit more aggressive because you can see how EMA keeps rejecting. It's a little bit stronger push down, and this bullish push is so tiny, you barely pushed above EMA, managed to work, but it's a little bit more aggressive. As we are pushing below EMA, I was expecting for prices to form failed second entry long, new high, first entry long, pullback, second entry long, failure below EMA, but we pushed back above. So this was concerning because at this point, there's even an option for me to draw a wider uptrend like this. So I need to be a little bit careful. I have a failed second entry long here, but now you're above EMA, and now I have more conflicting variables coming into play. So unclear, I don't want to be guessing, so I'm going to be waiting. Had the failed second entry long form below EMA, it would have been better, and market continues working to the downside. Since I can see that after break you have multiple pushes to a new extreme and another leg down, I can think about possible widening the channel. So let's talk about the options. I can either draw a channel like this, but I have no swing confirmation at the very beginning. Only 2 swings without a confirmation. So this is too broad, no early swings. I cannot use this wide channel. So this leaves me with still this option. Is there any other option? Well, I can possibly look. Okay, this spike kind of channel fits quite well. Fits also well at the bottom. But since I'm trading in trend range and the market structure was very slow, I know that the wider channels are not that reliable because the buyers will start buying at the bottom and there's not enough sellers for momentum to keep going to create new extreme. So even though this fits pretty well, since the range is so slow and fairly tight, I'm gonna still stick with my tight channel with the break new extreme, and I'm going to draw possible resistance because I'm going to expect correction phase, because you can see EMA flattening and you can see prices are going a little bit more sideways. I'm going to redraw the uptrend. We have a new low, first entry short, pull back, second entry short. I cannot sell, horrible bar. We have a new extreme. I have uptrend in play, and we have double trap. Everybody who went long too early below EMA is going to get trapped, and everybody who sold while the uptrend is in play below bad bar after new low is going to get trapped as well. And generally, once you see new low, you cannot take the second entry. You need confirmation setup, either low or high, or in this case, double trap may act as a confirmation. You can consider shorting here, definitely more aggressive because the bar is big, but that's acting as a confirmation. You definitely need to use limit order, which you didn't have a chance. Work for a scalp, and market is reversing. So I'm going to redraw the short and uptrend. I don't really like going long. We're too close to these highs. We have a new extreme. We have a new low, first entry short, second entry short. But this is just confirming the resistance, and the move up is quite steep. I would like to see some confirmation setup. But lower high is bullish bar, I cannot sell. I was looking for second entry short at the same time for second entry long, but below EMA we pushed above. So I need to wait again. And by this time EMA is flattening. It's too sideways, too congested, so I cannot take any setup. We have triple top, and I can have new low, first entry short, second entry short. Count reset, first entry short, second entry short. At the triple top, at the top of the trend range, great signal bar, decent setup to sell because you're selling at the top of the trend range where you expect to sell high, buy low. It is a broad sideways structure, which is a great sign. The broader it is, the chances are higher that the market will not push higher, and the signal bar is great. Second entry short, triple top. You're expecting lower high confirmation setup or failed second entry long, but you can't get it, and market keeps trending to the downside. So at least I'm expecting second entry short to get new extreme. But notice what is happening. Market created a very strong bullish spike. So the price action is telling me something here. We didn't even manage to go all the way to the support, which is already a red flag number 1. It's a little bit too bullish. But most of the times you will at least have an attempt for prices to creating a new extreme for this downtrend, at least attempt. But this time there was not even an attempt, just straight up bullish reversal. So this is definitely more bullish. I definitely cannot start selling just yet because this is giving me information. The market is more bullish, not reaching the support and not even an attempt for prices grinding new low. So I definitely cannot sell here. We have option in play. We're above EMA. I'm not interested. At this point, the market still resembles a trend range. And notice we have a lower high right at the EMA. You don't have to chase it. Great tier 1 single bar closing on its low inside of the downtrend. And more importantly, notice the visual aspect of the two-legged pullback. First leg, market likes to move in pairs of twos. Two-legged pullback, second leg up, fell breakout, confirmation, great tier 1 single bar, more aggressive. But since the lower high is forming so perfectly a key entry point, you have two legs, decent setup to take a chance. By the time you get a failed second entry long, you're too far from the EMA, too far down. I was expecting EMA to hold and a second entry short, but notice the bullish imbalance was confirmed and market rallied up higher. So at this point, it was really confusing because notice the price action. It looks too range-like for me to find any decent uptrend. If I draw this is too broad, only two swing confirmation. If I have early break here, I have confirmations, yes, but I already have overshoot. So I can't really think bullish. At the same time, I can't really think bearish because this is too bullish. So very unclear here. Bullish imbalance looks like a very big uptrend, but at the same time, it is too range-like. I don't like drawing wider channels unless I have to, but since you already have two legs and you have another massive push up, I have to respect some bullish momentum. But you can see it pretty much completed reverse and the channel ended up not coming into play and the market is about to close. No good setup to finish the day following the rules. Very slow day overall. We can see very few bars on the chart. At least you have plenty of time to think about the setup. You don't have to be forcing a setup because you already can take a look if it follows the plan and the setup follows the criteria. The price action fairly predictable, clear break, new extreme, but not that many chances for us to take. And the second part was quite difficult because this is where the bullish imbalance kicked in, but the market was never strong enough to create a legitimate strong uptrend. And to finish the day, you pretty much just get a choppy price action without the setup, which means if the setup is not developing, you don't really want to force it. Very few setups, but there are a couple of these chances. Uneventful day. I hope you manage to get at least a couple of these setups, and I'm going to talk to you next time. Take care, everybody.